We started the day with,
Markets opened up down in the hole.
but ended it with.
Investors running to the doors.
Initially, it looked as though markets may be headed for disaster. GDP numbers were lower than expected, and on top of everything, news that Citigroup plans to hand over more control to the government, upping government stake from 8% to 36%. Investors dumped off shares of Citi faster than you could say bank nationalization.
There's so much into these companies now that it's basically a nationalization already going on. They're just not using the word. They're backing off from it. But, I think investors are going to be afraid to get involved in the cities, in the General Motors, anyone that has a big government present, because they don't know what's going to happen to the shareholders.
Citigroup stock dropped around 40%, with investors worried that more government control would lead to less share value. But economists say government had little choice. Citigroup is just too big to fail.
What the government really needs to do is clean this up and do it quickly. Take over these troubled institutions. Citigroup, Bank of America are names that come up prominently. Take them over completely. Get rid of the bad assets, because right now what you have are zombie banks. They're neither dead nor alive.
Although the news about Citigroup weighed heavily on the markets, the Dow waffled around the 7,100 level, ending the day down 119 points at 7,063. Broader indicators were down as well. The Standard & Poor's 500 index dropped 18 to 735, and the Nasdaq shed 14 points to finish the session at 1,378. Traders say although the Dow didn't break the 7,000 level today, that doesn't mean it won't in the near future.
We closed on basically the lows. We closed down 119 points. If we were open another half hour, I think we would have broke that 7,000 level in the Dow.
And investors are already dreading Monday's news, when insurer AIG reports their fourth quarter earnings. Bonnie Ghosh, The Associated Press, New York.